kick it off with Royal Mail. I mean, these were at the top end of expectations, but it's disappointing, and parcels are facing fierce competition. Of course, we had that big hoo-ha about these shares being undervalued when they started trade. What do you make of it all?
Yeah, I mean, it's since last October when the company was initially floated, I think it's fair to say that the share price euphoria that we saw has now been replaced by the harsh realities. Quite apart from the pressure Royal Mail faces, which is unique to itself in continuing to have to provide the universal postal service, its main growth area, of course, is the parcels business on the back of online shopping. But that's not only a fiercely competitive arena anyway, but of course Amazon has been quietly emerging in terms of building up its own its own business there. And if you actually look at the metrics, operating profit going in the wrong direction, as indeed was the margin and the return on capital. Slight bright spot in terms of the dividend yield. Its projected yield is about 4.4%, which of course is healthy given the current interest rate backdrop. But I think the jury remains out on this particularly aggressive marketplace in which Royal Mail operate.
All right, just looking at some of the other numbers. I mean, we had easyJet yesterday. It did well on the back of that. It's up again today. I mean, I guess the consensus is Q3 was pretty good this side of the Atlantic and the other side of the Atlantic. How much support is that giving the overall market?
Yeah, it's one of those positive catalysts that we have been looking for. Certainly in terms of S&P companies, about 75% of them beat expectations. One of the reasons, of course, why the S&P indices have been closing at record highs recently. In terms of the UK, it's also been a strong third quarter reporting season. The problem we've got in terms of the FTSE 100, of course, is its very makeup. If you add together the mining sector, the banking sector and the oil sector, you're talking about nearly 40% of the FTSE 100 by capitalisation. Needless to say, each of those three sectors, for different reasons, have had a particularly tough year. That has meant a drag on the index, such that in the year to date, we're actually down about 50 points on the FTSE 100.